Now it's time for On Point, where we speak to experts to delve deeper into the biggest news stories in the spotlight right now. It's widely expected the Bank of Korea will announce in the coming hours that interest rates are going up again. Analysts expect the belt tightening to continue into 2022, as well as policymakers try to rein in skyrocketing housing prices and inflation. The spiking cost of consumer goods is causing this vicious cycle in which already heavily indebted households are just borrowing more and more just to try and keep a pace with the inflationary pressures.
The prevailing theory is, with inflation hitting a high not seen in 10 years last month, South Korea's central bank has no choice but to act, or inflation could rapidly spin out of control. For more on this, we connect to Professor Oh Joon-seok from Sookmyung Women's University School of Business. Good morning, Professor.
Thank you for having me back.
Now, the BOK will almost certainly announce that the rate will go up 25 basis points to 1%. Do you think this will have the desired effect, namely easing inflation and housing prices?
I suppose so in some degree, and there is no other choice, as you mentioned, the BOK, to press down the inflation pressure, so long as Federal Reserve keeps tapering. We already know that inflation is overall price increase in the economy. It's a mirror image of decreasing money value. What's going on? Capital flight in the capital market moves its direction toward the real estate market and gold market, soaring of the housing price and gold price. Hiking interest rate takes the role of a vacuum cleaner, absorbing money inflated in a balloon of economy. 25 basis point hike is just a level 1, and we'll shift up level 2 and level 3 sequentially to adjust for the market responses. What is worried people changing the level of is household debt that outweighs its GDP, as the GDP growth rate is growth rate of the household debt is bigger worry. Speed really matters. Snowballing household debt can hurt country's financial stability. Korea's household debt to GDP ratio was 104.2% in the second quarter. Hong Kong was the next 92%, Britain at 89.4%, and the United States at 79.2%. Korea is the only country with household debt outside the economy. Also, absorbing liquidity in this way by means of raising interest rate will continue afterwards.
Now, Professor, all signs point to more rate hikes next year as well. Do you have an expectation on just how high the rate will go percentage-wise by the end of 2022? And could you explain, as best as you can in layman terms, what higher rates mean for the average household?
It is a good question to ask, but very hard to answer. I'd like to answer in 2 points. First, absolute number of interest rate means little. U.S. Fed rate is 0.25% and BOK reference rate is 0.75%. What matters is interest rate gap between the two countries. I mean the difference between 0.75 and 0.25, 50 basis point. When Fed in the United States moves interest rate, BOK follows to keep the gap 50 basis point. Although there could be a time-lapse adjustment, it might be a long story to explain why makes this. But simply speaking, just because Korea is export-oriented and international investor-oriented open economy, financial stability should be kept from the perspectives of global investors or global trade. So when the gap loses its balance, interest rate parity condition breaks, foreign exchange market goes into crunch zone. So one thing we have to know, another is that if you are a salaried everyday worker, higher rate means higher austerity in your daily living in relation to pay more interest on your household debt. And if you are investors, higher rate means marginal rate of investment goes up, which in turn decrease investment or portfolio rebalancing into contraction. It might touch the vicious cycle of economic recession again. In prior to the cycle of decreasing investment, production, and employment, countervailing big projects should be provided by the government. This is why Biden administration pushed for the infrastructure investment plan at this moment, and Korea might be the same situation. So the Korean government should provide some kind of big project.
And before we let you go, Professor, numerous administrations in South Korea have tried to cool housing prices. It seems like very few have worked. Do you think Korea's property market could crash in the near future? And if you don't see that happening yet, what implications would a crash have for the wider economy?
It is also hard to tell, but the market dynamic adjustment themselves for a variety of contingent economic changes. So government policy targeted for one purpose could only be ended up in another chance of speculation due to government failure. Government failure is much bigger and severer than market failure. Overall house price in economics could be an indicator of growth of economy, measurement of aggregate amount of purchasing power. Whether or not Korea's property market crash depends on the outlook of the Korean economy. So long as the Korean economy forecasts the economic growth, it means that the tendency of house price hike will continue. If Korean property market crash happen, it might be the yield sign, which might be caused by the sluggish of economic outlook. Does it make sense when the government to choose the economic policy just for the reason to catch the house price hike, which means they take the economic policy of sluggish. This is policy dilemma. So the problem lies not in the house price increase, but at the speed of price hike. When it is too fast for salaried workers to bear the burden, it can bring out economic uncertainty in the market due to speculation with high leverage, which means overweight on the bank loan. This makes every reason for a government to intervene in the market transaction directly. And then until now, visible hand of government has been course, and the most of the popular speculators in the property market. And so at this time, what I say is just restoring market autonomy in the real estate market would be rather be the second best choices.
All right. Professor Oh, thank you so much. We appreciate your insights as always. Hope to talk to you again soon.
Thank you.